morning everyone, welcome to an episode of the Mizuho Week Ahead. I'm Boon Heng, macroeconomist at Mizuho Bank. This week's theme is Besieged. Amid the widely differing terms to reach a ceasefire deal in the ongoing war, risk sentiments sank further and markets continue to be cautious as Trump's extension of attack deadlines merely affirms the difficulty of reaching any resolution. Last week, the OECD upgraded global inflation projections, while both ECB and Fed officials warned of upside inflation risks. In Asia, softer PMI prints in Australia and India are reflecting the dent in economic activity from the oil price shock. In Thailand, the need to adjust fuel prices by 2 times in a week to the extent of a 30% increase from the start of March reflects the fiscal constraints of subsidies. The Philippines, the BSP conducted an off-cycle meeting last week, though the decision was to stand pat in a rather dovish hole. The BSP signaled that the surge in inflation is supply-side driven and monetary policy in this scenario has limited effectiveness. While such a decision is reflective of leaning towards growth at this juncture, they also acknowledge the potential second-round inflation effects to watch for and possible rate hikes should energy prices continue to rise. In Singapore, while the Singapore CPI print was not pivotal, the revelation on the need to review the 2026 inflation outlook portends upcoming MAS policy tightening in April. To be clear, the sharp oil price shock is likely to necessitate an upward adjustment of the Sing dollar NEER midpoint and a slope increment as well. In India, the authorities imposed export taxes on fuel to nudge supplies towards domestic consumption. This move also raises fiscal revenues to compensate for oil marketing companies' losses down the road. Looking ahead, Korea's March CPI this week will see a sharp spike to above 2.6% on higher food and energy prices. Even as markets rush to factor in rate hikes, we remain cautious of such lofty expectations given weak domestic consumption. Similarly, Indonesia's headline CPI will also accelerate on higher festive demand as well as partial pass-through of energy prices. Bank Indonesia will have to remain vigilant on both inflation and rupiah fronts, with the rupiah threatening to test 17,000 levels this week. Markets are bracing for higher oil prices this week, with the Houthi militants joining the war over the weekend. This puts another trade route choke point at risk with the Bab el-Mandeb, which is a narrow strait that is the backup corridor for oil, which bypasses Hormuz and is now under threat. An additional 10% of global oil flows may be disrupted and shipment journeys prolonged, pointing to further global trade disruptions. All in, EM Asia needs to brace for the impact of higher oil prices. Despite assurances from various governments, markets may begin to ponder the sufficiency of petroleum stockpiles, FX reserves, as well as the impact of energy optimization on economic activity beyond just the initial pure price effects. For more information, please refer to our weekly publication or contact your respective sales desk and RMs. And for regular notification on our market views, please subscribe to our channel and hit the notification button. Thank you.